The stock of the day is brought to you by IG, Australia's #1 CFD provider. With over 17,000 markets and extended trading hours, turn US earnings season volatility into opportunity. Get started at IG.com.
So our stock of the day is WiseTech. A bit hard to avoid this one because it has been in the news, of course, and the share price has reacted quite savagely to that news. It is that software company with allegations that founder Richard White had a lengthy relationship with an employee who was gifted a luxury waterfront mansion worth $7 million from the billionaire. The share price, just today, taking a look, it is off again. Did rise a bit yesterday, despite what we saw in the broader market, but has lost around 17%, in fact, in the past 5 days, mostly on Monday when he further sold his position in the company. Sold about $4.5 million worth of shares, in fact, so not a lot really, relatively. Then late on Monday, he settled a legal dispute in the federal court with a former mistress who will reportedly receive millions of dollars as part of the settlement. Then on Tuesday, the board announced an investigation into the conduct of the founder and chief executive. And interesting, it's all about these founder-led companies. Our stock of the day on Monday was MinRes, and that is also having issues at the moment with its founder and CEO. Michael, let's start with you then. How do you view this in the context, I guess, of these allegations, the response? Because, this has been around for quite some time, but suddenly the market decided to act on it this week.
Well, it's a business that we hold. It's a top 5 position for us. Has been a terrific contributor, less so after the last couple of days. It's a difficult one because obviously there's the moral or ethical complexities to this, but often it's left to the market to look at things from a more ruthless perspective and what is the broader implications on the business long term. And that's sort of what we're also trying to sort of work our way through. At the moment, it just seems like, the media pack have a number of stories lined up, and every day they're just drip feeding a new story into the market to keep it going as long as possible. So it's quite possible, I suppose, that there might be other stories to drop in the coming days, but then again, this might be it. So that's that uncertainty element where the market's a little bit unsure at the moment. And then the broader implications are whether the CEO decides to step down either temporarily or permanently. He is by far the largest shareholder. Market's trying to sort of establish how much of a dominant role does he play within this business still. He's obviously been involved ever since day dot and has had a very dominant position within that business. But are the next bunch of management ready to step up and fill the void if he is forced to step down, or whether he digs his heels in? That's another ongoing question. So that element of uncertainty is creating that drop in the share price because the business itself is going gangbusters. The most recent reporting season reaffirmed that perspective. They really do sort of dominate the space. Their cargo-wise product services, 50% of the world's top 25% freight forwarders. They've got a whole bunch of new products that have been released into market to help with the optimization for all these freight forwarders globally. So the business is growing at 25% plus on the revenue line and the earnings line. And that's expected to continue into the next couple of years, which more than justifies the current lofty PE. So the business itself is doing very well, and then you've got this element of uncertainty, which is very difficult to work out where it lands. But it does raise questions around the dominance of the CEO within the board, and whether or not the board is applying modern expectations when it comes to corporate governance. But at this stage, it does seem to be more of a private matter from our perspective, but there is obviously the risk that becomes a bigger issue for the company if they're seen to have acted not in line with modern expectations. So it's a difficult one, but we're probably buyers of the stock.
What since it's taken that fall?
Well, we already hold it, but we would be looking to top up for a lot of our investors and from our own standpoint on that long-term narrative that eventually this will wash over, and then the business itself will continue on in a positive light at an operational level.
All right. Ben, what are your thoughts then, and does the conduct of the founder and CEO fundamentally have a broader issue there for the business?
Yeah, look, it's hard to say. It's possibly just a lot of short-term noise. It is obviously negative publicity for the company. what I would say from a corporate governance perspective, if you look at the top shareholders of WiseTech, you're looking at AusSuper, Vanguard, BlackRock, BetaShares, all in the top 10 shareholders. We are kind of wondering, in terms of their ESG preferences, whether this could affect, this latest PR stuff with WiseTech's founder could affect that standing, and potentially if you could see some selling pressure on the back of that, even outside of what ends up happening from here. So I would caution that that's one risk. The other key risk is that yes, WiseTech has been growing strongly. It's been one of those rare roll-up successes where they basically bought all the key competitors and plugged them into their core freight logistics software product, and it has worked really well. It continues to grow strongly. However, everything has a price. I look at sell-side research reports that where analysts kind of justify the valuation by saying, we apply a 90 times PE and a 52.5 times EV/EBITDA multiple. And we just look at that and think, well, that's more chasing the price, changing the narrative to chase the price more than, actually trying to figure out what this is fundamentally worth. Having said that, it has kind of continued to prove the doubters wrong until probably the last month, where shares have pulled back. So look, it's not one we own. It's on the same price to sales multiple as Nvidia. Microsoft is half the price to sales multiple. So look, is it kind of in the same league as those? We think possibly not. And even if you're looking at other plays on the ASX, we think there's better opportunities, particularly in that smaller kind of undiscovered area where shares are yet to capture that re-rate, rather than already at the end of their re-rate. It's hard to see WiseTech being valuation doubling, but look, stranger things have happened, and perhaps I'm just jaded because I think I bought this one down at $10 down in COVID and sold it at 30 odd. So look,
right.
take what I say with a grain of salt. But
well, you still made a profit.
Yeah, it's always good to take a profit.
So what would you do with it right now then? If you held it?
We think it's probably still a sell.
Sorry, you'd sell it?
Sell, yep.
Yeah, interesting. All right, there's your market right there then. A buy and a sell for our stock of the day, WiseTech.
The stock of the day was brought to you by IG. Turn volatility into opportunity this US earnings season with extended trading hours on over 110 key US shares. Get started at IG.com.